Just when you look at some of the things that we've been waiting for a long time, which is M&A in the banking system, what needs to happen right now for M&A to come together? Cross-border, inside the UK, just in Europe in general, to try and compete, productively with the U.S. banks?
Yeah, so one, I think we are competing productively with the U.S. banks, particularly with our corporate and investment banking. If you look again at our first quarter, Francine, our market share in the investment banking business went up quite a bit in the first quarter, and that's a trend that we've had over the last couple of years. So I think we're very much competitive there. I think on the M&A side for banks, one of the challenges really is banking is involved in a digital revolution. In the amount of change that we have to manage now because of the new technology platforms, because the new way of digitizing finance is incredibly complex. And in many ways, it's embracing the new technology to run finance and getting away from these big, in-market mergers where you get diverted your attention for 3 to 4 years. I don't think you're going to see the M&A market come back for the major banks for a long time.
But does that mean, Jess, that actually, the U.S. will continue being more aggressive in places where European banks traditionally were better?
I think that the U.S. banks are, going back to Tom's question, the U.S. banks are committed to the universal banking model. I think a number of European banks have made the decision that they want to decrease their investment in investment banking, and they're pulling back from the markets. That's part of the HSBC reorganization. That's part of the Royal Bank of Scotland reorganization. So that's all very public. The U.S. banks are committed to that universal banking model, and so is Barclays.